Hello members, LA here. I'm going to spend a little time today talking about takeaway bars, what they are, what they tell us, when they occur usually, and what's the most information that we can get from them. What do they tell us? When I talk about takeaway bars, I try to always provide a definition of what they are, right? And in this case, a takeaway bar really is when price on two adjacent bars results in the second bar taking away the vast majority, if not all, of the prior bar's price movement. And so if we look at just an example here on the S&P 500, this is the daily chart, and takeaway bars are going to be applicable to whatever time frame you're looking at. They happen more frequently, like most things on the daily charts, and less frequently as you go out in time in terms of the size of the chart. So you're not going to see as many on a weekly. You're also not going to see as many on a monthly, but they do occur. So let's just talk about the occurrence here and what they are. As I just said, it's where price, there's two adjacent bars, and price on the second bar ends up taking away everything on the first bar. Now it kind of leads us into this question of when do they occur, and they can occur at any place on the chart, on any time frame. But usually they tend to happen in some sort of a larger move. So in other words, like in this case, there was a downtrend going on, and then we actually had a little push up here on this bar, which was counter trend, and then you get the takeaway bar here on that very next bar, right, on this bar. So trend this way, tries to counter trend, and then it takes it away, and you get an extenuating circumstance, right, where it extends in the direction of the existing trend. What do they tell us, right, when you see that? And they can occur in a downtrend, they can occur in an uptrend. Matter of fact, there's a small one right here in this uptrend. So you've got a big long trend going, you get a down day, and then you reverse it. What do they typically tell you when that happens? Well, usually, they're most informative in that they tell us that it's a reversal of fortune. So if you think about what we see on this particular bar, right? You've had a pullback. It tries to go higher here on these two bars, then comes back down and is testing, right? It tests, goes right back up. Oh, looks like this downtrend's probably over. But the very next bar reinforces that downtrend and push it. And when that happens, think about anyone who bought this bar, right? The up bar. Anybody that bought the up bar now is going to be in a losing position. And that's exacerbated the very next day when it starts to extend, and which can lead to a much faster move down. And that's what a takeaway bar can do. Now, they're extremely useful if the width of the bar is great relative to those bars around it. So this is a fairly large width bar. In other words, the top to bottom of the bar is pretty high. That can lead to a faster move down, which is what you saw, down in the case here because it was a takeaway bar to the downside on an existing trend. Now, if you look at this trend on the way up, long, steady trend on the way up, right? Continuation, and then here you get a little pullback, and then the very next bar, it's a takeaway bar back to the upside. But look at the length top to bottom of this bar compared to these, much smaller. Look at the action that comes after it compared to the action that came after these. Now, mind you, downtrends usually are going to exacerbate anyway. In other words, you're going to get bigger moves down, but still, you're not getting as much. Yes, you get the extension in the direction of the trend because anyone that thought it was pulling back got squeezed out. That's what a takeaway bar is. That's why it does what it does. It's a reversal of fortune, right? The prior day's move is completely reversed. So those who thought they were on the right side of a trade suddenly find themselves on the wrong side, and they have to move to unwind that trade. When do they occur? As I said, they can occur on any time frame. And when are they most informative? Takeaway bars are most useful when these conditions are prevalent. There's been some trending period for some long period of time, right? And a takeaway bar extends in the direction of that trend. And that is what we just saw here on this situation here. You have a trend going down, right? You get a takeaway bar, and then it extends that trend. You got a trend going up, takeaway bar against the trend, extends the trend back up. Now it can happen on any time frame, like I said, and there just so happens to be some on the upside on the weekly time frame. So here, for example, if you look at this, you can probably spot a takeaway bar pretty fast. Actually, 2 cases of it as I'm glancing at it, maybe 3 actually. There's one here, right? Trend is up, pulls back and takes it away on the next bar. And this is on a weekly now. There's another one right here is another one. And that could have been, but wasn't. And then here's one that serves as a reversal. We were saying there could be reversals. Here's one that tried to reverse, but it actually didn't quite take it away. You can see, it actually traded down underneath, but got pushed back up. Here, you can see the second bar almost completely envelops the bar in front of it. That's what these have all done. In other words, the white, the body of the candle is enveloped by the body of the second bar's candle. And so you get extensive, trade up, counter trend, takeaway, right? Trend up, counter trend, takeaway, extension. Again, this one not quite a takeaway because it actually doesn't have the complete bar and it doesn't get much extension. It's kind of delayed here. Here's the reversal that actually works. So why is that? Well, because it's a full extension. So you had trend, all along here, trend has been going up. You get trend going up here, white bar up, takeaway bar, the very next bar, right? And that's actually a reversal one, and that's a little bit different than all the others we've looked at. So that's takeaway bars. That's how they work, what they are, and when they're most useful to you. And actually going back to this, I'm trying to see, are these large? Yeah, this is a fairly large bar, leads to a fairly large move. This one's not quite as large. The first bar that's taken away. Price distance here is 1814, for example, to 72. So that's what, almost 60. Whereas this one is 11. That's about 40. So you can see the difference, and you see the difference in the extension. And then this one up here is not that big, but it actually leads to a pretty good extension. Downside typically always leads to a faster move. Takeaway bars, what they are, why you look at them, and how they can be useful for you in your trading. That's it for today. Thanks. Take care.